The new guidelines require SOEs to set up proper decision-making systems and to carry out financial feasibility studies of overseas projects before making any investment decisions. State-owned companies should also send on-site inspection and audit teams to evaluate possible overseas projects. One industry consultant says this should help SOEs learn from past experience.
So this is things you kind of a checkbox. This is things you need to be doing. If you haven't been doing that, you should. We also saw that in the guidelines. They also have says post-deal kind of evaluation process. Also, more and more companies putting a focus on that. This is not really trying to say who made the bad decision, who should be made accountable, but really to assess what went wrong during the process. Is because the process went wrong? Is because the investment decision is not made by enough due diligence, or is because of external environment and competitive landscape has been changed. So really trying to find out what is the root cause of this investment if it's not being performing as good as it was planned for.
Just after the guidelines were issued, the Ministry of Finance said in a news conference that poor asset quality, weak profitability, and low investment returns are the main problems SOEs have had when investing overseas. One legal expert says that if SOEs follow the new requirements, it will help improve the image of Chinese companies when they go abroad.
Overseas companies that are potential investment targets would like to know what is the SOE's relationship with the government and get more transparency about the company. There are detailed regulations about capital control, forex management, and tax issues. Also, the guidelines say companies should follow local legal regulations. All these are to ensure foreign companies that when SOEs invest abroad, there will be standard procedures for them to follow, rather than just making decisions based on one person's ideas.
Official data show China's non-financial outbound direct investment fell 45.8% year-on-year to $48.19 billion in the first half of the year, the first decline since 2015. The government has been reining in private sector overseas investment in the past few months in an effort to control capital outflows and avoid financial risks. Several high-profile private companies' overseas deals have been reviewed. The new SOE regulations come in the wake of those reviews, but analysts we spoke to say the new procedures should not dent SOEs' confidence in investing overseas. Mi Jiayi, ICS for CGTN, Shanghai.